Um, this is actually, I think, the third time that I've been lucky enough to be on the same stage, as it were, as Mark Mobius. The first time was at an event at Sassin. Mark was sort of a headline act, and I was way down amongst the supporting acts at that stage. I think that might actually have been one of the Bangkok Business Challenge days at Sassin, actually, which is something that if you don't know about, you should. They're very, very important events, very useful events that are sponsored by our friends at the Stock Exchange, who are here today, so you can ask them about it. Second time was when Mark kindly came along to the Foreign Correspondents Club a couple of years ago, which a lot of people here.
Is that better? Yeah. A couple of people here may well remember that. And Mark's kindly agreed to come back again for some more punishment today. So the format is, I'm just going to ask a few questions, have a bit of a chat with Mark, pick his brains, and then we're going to throw it open to the floor for everybody else to be able to do the same, basically. So, thanks for coming back, Mark. We normally start these things, I suppose, by doing a bit of an introduction, but because of who the audience is, then I think everybody knows who I am, and I think everybody on the planet knows who you are. So I think we might just skip that today and get onto the important stuff.
By the way, I'm glad you didn't go through all the list of accomplishments and so forth, because I just was in the U.S. and, we have our salespeople there, and they say, Mark Mobius is a guru, he's this, he's that, he's done this, he's written books, and he's the greatest thing on earth. And then,
all of which is true.
But then I'm reminded when the market came down in I think it was '97, things were really bad, and I happened to be in Scotland, in Edinburgh, Scotland. We have an office there, and the Scots don't like to lose money. And this gentleman called into the office and said, "Now, about this emerging markets fund, I'd like to talk to Dr. Dubious." So that brought me down to earth.
Markets always brings back down to earth. Mark, for everybody who doesn't know, Mark is probably the sort of, I guess, investment market equivalent of Woody Murphy, if that's not an inappropriate comparison. He is the most decorated person in the investment business. Going back to a couple of years ago, I'd kind of like to pick up from there, I suppose, almost as if, almost seamlessly, as if time hasn't passed. There were a couple of things that you said at that time that really got a lot of reaction from the floor. I don't know if you can remember. One of them was a question about double-dip recessions. At that stage, we'd had the global financial crisis, we'd had the response to it, and things weren't quite going as well as people had anticipated, I suppose. And all the talk was double-dip. Your answer to that was very, very emphatic. It was, you defined the double-dip recession as being when people take the stimulus away, they take it away too early, and you were very clear. It wasn't going to happen. It was impossible. The guys that we had in charge weren't going to let that happen. You're absolutely right, bang on the money, of course. But we're now at, I guess, the next stage of that same problem, which is that all the questions that we seem to be hearing lately are about tapering, i.e., are they going to have to, at some point, take that stimulus away? What's your view on that? With all the mixed messages that we're getting at the moment, can you help us understand that a bit more clearly?
Yeah, the thing that has really surprised the economists and all of us is that despite this incredible stimulus, the QEs that we've gone through, we haven't seen inflation raise its ugly head. And this may be the real game changer going forward, because if Japan continues on the path that they're going, which is easing in spades in terms of the amount that they're pumping into their economy, relation to GDP is much greater than the US. If they're able to get away with this without pushing up inflation, then we're in a new game, economically speaking. And I think the reason why this is happening is that you're seeing giant strides in productivity increases as a result of automation. It's a result of the whole internet technical innovation that you're seeing globally. Manufacturing is becoming much more automated. Agriculture is becoming more automated. In every direction, we're seeing these tremendous increases. Services are becoming much more automated. and much more powerfully backed by technology. And what you're seeing, particularly in the emerging countries and frontier, a leapfrogging from almost nothing to the very latest. To give you an example, we have big frontier funds, and we're invested in Kenya. And one of the companies in which we're invested in Kenya is called Safaricom. It's controlled by Vodacom of the UK. They instituted a program where, with your cell phone, you can go to one of their shops that they've appointed, tiny little mom and pop shops around the country, around Kenya. And with your cell phone, you can get a code, give them some money, get a code, transmit that code to your relative or friend or whoever you want to transfer the money somewhere in the country. They can go to an M-Pesa shop and get that money. Most of these people don't have bank accounts. So you're seeing a leapfrog from nothing to the most advanced technology in terms of transfer of money, the most efficient way they could have transferring money. This company now is doing a turnover which is equivalent to about 20% of the GDP of the entire country, of these transfers. This is what we are seeing in terms of productivity increases. And I think you're going to see more and more of that as we go forward, which has tremendous implications for employment. Because in many ways, the effort and the target that Bernanke had regarding unemployment probably is unachievable, because there have been improvements, no question. Now we're at about 7.5% unemployment in the US. Can't get much better than that because of the fact that many jobs are now gone because of automation. You cannot, these jobs don't exist anymore. And the people that did them don't have the wherewithal, don't have the knowledge to move into another area which is involving technology and computers. So I think this is something that we will all be surprised with going forward.
What does that imply for the sort of pecking order of developed economies, emerging economies, and frontier markets? I heard what you were saying earlier about emerging economies being at that takeoff stage, but what does that imply for the relationship between the three?
So what that implies is that you're going to have much more liquidity coming into these markets. Why is that? Well, with the cell phone, with the power that cell phone gives people, they are much more in touch with their governments and with what's happening in their countries. They know about corruption now. They know about the inefficiencies. And they now have the power to change things with this cell phone, getting together with other people. Now, what will be the reaction of the governments? Of course, the governments will become much more populist. What does that mean? It means that they will be very determined to get more money into the hands of their constituents, even if it means direct handouts, which is what you're going to see going forward in the US. If Larry Summers becomes the Fed president, the head of the Fed, he will make direct payments to people. Because Obama is a populist leader. And you're seeing this now globally. Now, what does that imply? It means that there's going to be an excess supply for investment. So you're going to see more money going into markets. One of the industries we like is the gambling sector. You're going to see much more money going into the gambling, entertainment, gambling, recreation. Today, if you travel around the world, tourism is huge. I was in London a few weeks ago, couldn't move on the streets. New York, the same thing. Toronto, the same thing. Restaurants are full. What is going on? It means people have excess liquidity they want to spend. And you're going to see that, of course, here in Thailand. I don't know what the tourist statistics are this year, but I'm sure they're going to be very, very good.
Yeah, one of the statistics recently published showed that Bangkok, I think, is the most visited city in the world now. It's overtaken London and Paris, according to some metrics. So, but you know, it seems to be a double-edged coin in that a lot more people travelling from Thailand to places like Europe these days to go and visit there because of that increasing wealth effect, as you say. So that's interesting. I don't think many people have kind of thought about the smartphones leading to greater transparency and therefore, you know, potentially greater income distribution. Because we've seen, you know, one of the problems in the world, I think, has been deteriorating income distribution over the last 30 years. And you think this may well be a step towards solving it, yeah?
There's no question. There's going to be an effort to correct this disparity. You can see that, of course, Brazil, if you could see what's happening there, and particularly in the US, you're going to see this. Obama, in fact, just yesterday or the day before said that the big problem in America is income disparity. What does that mean? It means that he wants to do something about it, and he's going to pump more money into the economy in such a way that these lower income people get more.
And so for anybody in the room who is a gambler and is going to, you know, try and use one of these companies you're investing in, you think maybe they should be putting a bet on Larry Summers rather than Janet Yellen in that case?
My guess is Larry Summers, maybe. Let's put it this way, if I'm Obama, who would I favor? I would probably favor Larry, because he is in favor of more direct intervention, whereas the path of the Fed up to now has been indirect.
That's interesting. For anybody in the room who doesn't read my tweets, which is probably most people in the room, I did notice yesterday that Libya is now advertising for a new central bank head. I suggested that maybe Ben Bernanke might want to put his resume in. Going back to...
By the way, Libya is one of the frontier markets.
Do you invest in Libya?
We were looking at Libya before the big upheavals we've seen. I visited Libya, I went to the stock exchange there. They had a nice little well-run stock exchange. It's a great country, and we look forward to getting back in there.
Because, again, one of the things that you said earlier that really struck me was 25 years of running Templeton Global Emerging Markets Fund. 25 years ago, there were only 5 countries that were investable countries for that fund. There were only 5 emerging markets that you could invest in, which capped the amount of money that Templeton could raise at $100 million, whereas currently you now run
50 billion
investing in 70 countries.
70 countries, exactly.
So is that kind of opening up of economies and markets? Is that the biggest change in your 25 years of running the fund, or what else are the really big kind of structural sea changes you see?
Well, the real big change, well, a number of things have happened, but from the market point of view, the stock market point of view, what happened is that finally economists in the World Bank, in the IFC, in the IMF, they began to realize that in order for countries to grow, and this was a question, by the way, they were struggling with for a long, long time. I studied economics at MIT, and that was the #1 question. How can we get countries to grow? One economist said, you build a railroad. Another economist said, you build a steel mill. Another economist, I remember one of my professors said, you have to change the child rearing practices, because the first 5 years of a child's life are the most important in terms of his development, and so forth and so on. But then they finally arrived at the conclusion that the way to have countries grow is by creating a market economy. In other words, signals of allocation of resources must come from the market, from demand. Supply, demand, market orientation. What does that imply? It means you've got to go from state-owned enterprises to private sector enterprises. So that has been the sea change, and what really has put us in business. Because as you just said, when we started, only 5 markets. Why? Because most countries had foreign exchange controls, prevented foreign investment, in fact, tried to keep out foreign investment, and just didn't have a market economy. And state-owned enterprises were the name of the game.
Maybe for the benefit of our friends from the Thai Stock Exchange and for everybody else, you could just retell what you told me a few years ago about your first ever visit to the stock exchange here in Thailand.
Well, my first visit was to the office of a man by the name of Willis Bird. I don't know if you know him. You knew him. I was looking for the stock exchange, and I went to his office, and I said, because I heard he was a broker, and I said, Mr. Bird, where is the stock exchange? He said, you're in it. And I turned around, and sure enough, it said Bangkok Stock Exchange. He was running the stock exchange. And of course, what happened then, of course, the Thai Stock Exchange began, and a number of years later, and then, you know, we saw the growth. But it's an amazing, you know, story of how things changed dramatically here in Thailand.
No, that's right. I think sometimes we sort of lose perspective on that, which brings me on to what was going to be my second question. So the other point that you made at the Foreign Correspondents Club was there were a lot of concerns at that stage about what was happening to Thailand. I think it was 2010. We'd had the you know, well-publicized problems, the Rajma song, and a lot of people were really starting to get very, very worried at that stage. And you know, you made two comments that I remember. One was that this was starting to look like a time of, you know, maximum pessimism, therefore a good time to buy. And I think the other thing that you said was, you know, Thailand has this well-established kind of tradition of business is business and politics is politics. And you know, we've seen whatever it is, 32 coup d'etats since 1930, and you know, business continued, and Thailand's grew and Thailand prospered during that time. And you know, you were fairly upbeat about what I think the immediate and the longer term prospects were for Thailand at that stage. Certainly in the short term, you know, what you said has been very much borne out by the recovery we've seen since Rajma song, since the floods. What are you thinking on Thailand today?
Thailand is now on the cusp of another growth spurt because of a number of factors. One, ASEAN, the gathering together of these countries in this region, Philippines, Vietnam, Cambodia, Thailand, Myanmar, Malaysia, Singapore, Indonesia, so on. This is an incredible development because it's going to, of course, it's an economic union, which will get stronger, but eventually it will merge into a political union, in my view. And this will be very, very critical to benefit all these countries. Because if they're able to forge this economic union to a greater extent, where goods can flow freely between these countries, your market size immediately becomes larger. So Thai automobile sector can serve a much larger constituency than they do now. That's number one. Number two, if you look at the political structure in Asia, the big boys are Japan and China. Okay, China has just surpassed Japan in terms of economic size, but still they're very, very big. The Japanese have not gotten a very friendly welcome in China, although they have quite a lot of money invested there. So their preference is to have an ASEAN market that is equal to that of China. So they will be very interested in fostering stronger ties with the ASEAN region. Now, with the amount of money that they're pumping into their own economy, you're going to see excess money coming out into Southeast Asia. And you're going to see the growth of many Japanese enterprises coming here, particularly smaller family-owned enterprises from Japan who serve the larger enterprises and back up the larger enterprises. So that kind of development is very critical, because if you're going to build an automobile industry or a computer industry or whatever, you need component suppliers nearby. And if you're able to build that infrastructure, then you can have quite a very successful business.
Well, I think that's right. And I also think, again, looking back at the last 25 years, it's amazing how quickly countries do move up the value chain. I remember as a kid in England that on Christmas Day, the worst thing that could happen was you'd open your presents and they'd say "Made in Hong Kong," because you knew they'd be broken by Boxing Day. And you know, it's that's all changed now. If we look at the role of Hong Kong as a sophisticated, global financial services center, it's unrecognizable from what it was.
Even if you go back further, I remember Japan used to be the biggest supplier of toys, low-cost goods. And I remember there was one, the labels usually should be made in Japan. And there were a number of labels coming out of Japan which said "Made in USA." And it was very puzzling until we found out that there's a town in Japan called USA, spelled USA. Now they're proud about putting "Made in Japan."
Just one last question from me then before we head open to the floor. And on that last theme of Japan might have a really good interest in the AEC developing for the ASEAN countries themselves. Obviously, it's really important, but it obviously goes against China's interest. Again, it's something I think that you were saying this morning. China might not be so keen to see a really strong regional union here within ASEAN. Is there anything China can try and do to delay or derail this?
They're trying hard by fostering agreements directly with each country. They would prefer to do that, have bilateral agreements, and thereby preempt any regional agreements. And they've been partly successful to some degree, but I don't think they will be able to. I think the interests of the ASEAN nations will be very clear to them themselves, to the ASEAN countries themselves, that they're better off creating a union that can face China on equal terms, which would be good for both sides, basically, because you can't, negotiations don't work if you have one weaker side. So I think from China's point of view, over the long term, it'll probably be positive if they can have a strong ASEAN partner.
I'm not sure they see it that way today.
No, I think from a military standpoint, they don't like it. It's not good. But from a trade viewpoint, it'll probably be good. Because you see, what happens is that when you have a trade union, just like you have the World Trade Organization, it not only forces trade, but it forces investment. So you can more easily invest in the counterpart. And of course, that will be an interest, China's interest as well.
Okay, so that's a tiny fraction of what I want to ask Dr. Mobius, but I don't think he's got enough time to spend a week here answering all the questions I'd like to ask. So I'll give anybody else now a chance. Any questions from the floor? Anything anybody would like to ask?
What about Mongolia and Myanmar?
Mongolia and Myanmar. Mongolia is in a really very interesting and difficult position, I would say, because their orientation is towards Russia. They are quite fearful of China, of being taken over by China. And if you go back in history, you know they were spun off from what was China. So you have this difficult position where these resources that they have are being used in China. The most logical place for Mongolia's iron ore, Mongolia's coal, any resource they have should really be going to China, because the demand is in China. But they don't want to be dependent on China. So they're in this schizophrenic kind of position. I'll give you an example. I was talking to the Ivanhoe people, this big Canadian company. Ivanhoe was the big investor originally in the copper and iron ore and coal in Mongolia. When I went to see them, they said, we have these coal operations near the border of China. And I said, how are you transporting this coal? He said, by truck. I said, isn't this kind of inefficient? Why don't you have a train? He said, the problem with the train is that the gauge, the width of the rails in Mongolia are Russian gauge, and it's different from the Chinese gauge. I said, well, that's no problem. You just build the train tracks from China, into Mongolia. I said, no, the government will not allow that. They want to keep their own gauge because they're afraid of invasion from China. So this is the kind of problem they've got. The other problem we have in investing in Mongolia, in stocks, in the stock market, they have a stock market, is having a global custodian. Because whenever we invest in a country, we need to have a custodian bank that we can trust to safeguard our assets. And there's no bank now, or no bank set up in Mongolia that are capable of doing this. So I have to now start making all the rules and regulations and so forth. So that has been going very, very slow because of this problem of, on the one hand, they want the investment, on the other hand, they don't want to be controlled by foreigners. They have this kind of schizophrenic thing. But generally speaking, the potential is incredible. I mean, in terms of land area, in terms of resources, so forth, Mongolia is really quite exciting. And we are looking at, we continue to look at it. And we go in indirectly. Companies listed in Canada or other places we go in. In case of Myanmar, again, you have a problem of getting set up, getting all this infrastructure set up to allow us to go and invest directly. And they really don't have enough companies. So what we're looking at there is more private equity deals where we go in, we invest in a private equity opportunity, and then we take this company to the market maybe in 5 years. That's really the way we're looking at it. But again, probably Myanmar is even more exciting than Mongolia because of the investment potential so much greater.
So it really sounds like forget it for 2 or 3 years.
Yeah, basically, I think you can look at it that way. Very often what happens is that you've seen in Vietnam, market develops, everybody goes crazy locally, they speculate, the market goes up like crazy, it gets too expensive, it crashes, then it's a good time to get in.
There are some very early stage funds already that are investing in Burma, but I think you've really got to have a very strong stomach to be able to put any money in there. It's the kind of thing where I think the payback is going to be very long term. I recently heard Jim Rogers, who's in Singapore, like Mark, say, if he could, he'd invest every cent he got in Burma. Well, he could. We could arrange it for him if he wanted, but I really wouldn't advise it. It's the kind of thing that is still probably too early stage and too speculative, I think.
I'm very interested in what you were saying, Dr. Mark, about ASEAN and about the ASEAN market and how it's going to come together. It's going to be one market. Some of us here probably have some indications of what might happen vis-a-vis the EU in Europe. Can you really see the particular countries governed by the fiefdoms that they have in the various countries, not only here but in other countries, giving up their power to for the common good of ASEAN? They won't even give up their power for the common good of their own domestic countries. I really can't see that. I'm sorry, but I don't really buy that just at this moment. But I would also say that I would agree with you. There are tremendous opportunities in Burma. Burma has great opportunities regarding raw materials and labor and other things, and it could well, in the next 20 years, overtake Thailand unless Thailand is very careful.
I agree there are incredible opportunities there. The growth is going to be very rapid going forward if they continue on this path. But in terms of ASEAN, you're absolutely right. Nobody's going to do anything unless it's in their self-interest. So populist politicians in Indonesia, Malaysia, Thailand, wherever, will not do anything unless there's something in it for them. But I think what you're going to see is this will dawn on them. This will become apparent to them that it's in their own self-interest to move forward on these things because there's certain benefits to the constituency, benefits to the industry that they're involved in or whatever. So, to give you an example, let's say beverage. What's the ambition of this company, for the man that runs it? In Thailand, he faces certain restrictions to grow. If he becomes a player in ASEAN, there's a whole wide opportunity open for him. So it's in his interest to promote this kind of free trade, free investment, and so forth and so on. So I think that's what you're going to get. You'll get more and more of these industry leaders pushing governments to move in that direction. And this, I think, will be good. Another example is labor mobility. One of the reasons why I think Europe has survived all of these problems is that as you travel around Europe, you find that the Europeans have been moving in all over Europe. You find in London, the Polish guys are doing all the work. You find in Germany, I was recently in Germany, I have relatives in Germany, the guy that was waiting on us was Italian. So you're seeing this incredible movement which relieves the pressure, you know, on the governments. Because if somebody's unemployed, he's unhappy. If he can move to another country to get employment, it relieves the pressure. And I think the same thing is true here in ASEAN. For example, Indonesians working in Malaysia is a big, big problem. Political problem, illegal immigrants, all the rest of that. They've got to work out systems to allow this to happen. Problems with the U.S., for example, immigrant labor going to the U.S. You've got to solve this problem because you have one market. You know, the Mexico, U.S., Canada is one market now. You cannot have a situation where people are restricted from moving in and out. So I think as we go forward, there'll be problems, no question. But as you go forward, you're going to see more of this happening, you know.
But I would just say 2 points, actually. Bev, of course, would have been in the stock exchange here had the government allowed it, exactly. Of course, which they missed the trick.
Exactly.
And the next trick, of course, is that in Thailand at the moment, for instance, there's a shortage of labour. You talk to any employers, there's a shortage of labour, and yet they want to throw the Burmese workers out.
Exactly.
This doesn't make sense. But that's why I think you're going to see pressure from the private sector for this to change, you know, because the private sector wants to bring in Burmese workers. Thai beverage wants to be listed in Thailand. So I think going forward, the pressure is going to be there to change.
Going back to what you were saying right at the beginning, is freedom of information, smartphones, is that a potential driver that's going to be one thing that helps to accelerate this process and overcome a lot of these natural objections? That
No question. You've seen that all around the world. I mean, the cell phone has really given power to people. I mean, in Africa, for example, everybody's got a cell phone. I was shocked, by the way. I was in Germany with my brothers just this 2 weeks ago, and being so provincial, the Americans had cell phones that don't work anywhere else except the United States. And,
Yes.
you know,
And Japan.
yeah, and I said to my brother, Hans, come on, why don't you get a SIM card? He said, no, my phone can't take an international SIM card. So we went into a phone company, a small shop we were in Baden-Baden in Germany. And I said, I want a SIM card. And of course we couldn't get one that fits his phone. So I said, what's it cost to buy a phone? 25 marks. It's unbelievable. 25 marks for a cell phone with a SIM card that could call anywhere in the world. This is what we're talking about. Now, if it costs 25 marks in Germany, imagine what it costs in Kenya. So this is what we're seeing, this incredible power of this cell phone around the world. They can communicate with each other and, exchange ideas. Somebody sees corruption going on, they spread it around. That gets into the internet. Transparency is incredible now. That's the reason why the U.S., I think, is going to fail in trying to restrict the flow of information. Because there's always going to be someone like with Snowden. There'll always be a Snowden around who says, I don't like what I see, I don't let everybody know. And now transparency is going to be much, much greater going forward, which is kind of a disadvantage for some people, but generally speaking, we're going to see more of that.
Even in China.
Even in China. I mean, China now, you think about it, 500 million internet users. How can you monitor everybody? You need an army of people.
I read somewhere the other day that the expectation is smartphone penetration becomes 90% of the world's population before too much longer. I think it's currently about 35 to 40%, and they say it's going to run to 90%. So,
well, you know, it's funny, we were in Nigeria. I was talking to the Pepsi bottler, and I asked him, who's your biggest competition? And I expected him to say coal. He said, my biggest competition is the cell phones. Because people, if they have extra money, they decide whether they're going to have a Pepsi or buy more time for their SIM card. This is what's happening.
how are we doing on time? Have you got time for
Yeah.
any more? Any more? Janet?
I had to.
I knew you would.
I'm working currently in a market which is probably beyond the frontier because I'm working in Kabul just now in the banking sector. But I have seen what you're talking about in terms of the penetration of mobile phones and the difference that it is making. My own feeling is that this in large part explains why it has proved impossible for both Lloyds and RBS to sell their huge legacy branch networks in the UK. Nobody wants branches. Why would you want branches with staff, with furniture, with rent? Why? When everybody can just have a cell phone.
Exactly.
But from what I've seen and looking at the major operators of cell phone networks in the Middle East generally, a lot of them seem to be quite literally coming out of Africa. What is the future for Africa? Which of course is so many different countries with so many different backgrounds, but is this going to be Africa's time or should we just leave it for the grandchildren?
It is going to be Africa's time. We see that in our frontier funds, for example, incredible opportunities in Africa, in every country. As you well pointed out, they are all different. You know, a lot of people think, oh, black Africa, everybody's black and they're all the same. No, they're very different. If you go from, to give an example, we were recently in Rwanda. What do you think of when you hear the word Rwanda? You have a genocide.
Well, personally, I think of a gal called Jennifer Williams that I used to work with,
Oh,
whose
really?
father was Welsh and whose mother came from Rwanda, and she was born in Rwanda, and she spoke with a beautiful Welsh accent, so that's what I think of.
Well, what we saw was a very well-developed infrastructure, believe it or not, and a very orderly society. So, you know, these are the big surprises that you get when you visit these countries. You find really quite surprising differences from one to the other. But you also see two things. One, young, ambitious population. People want to get ahead. They are very ambitious and hardworking. And this is, you know, a lot of people think of Africa as natural resources, mining, you know, diamonds, gold, palladium, platinum, iron ore, coal. That's, yeah, that's there. But the people are also there. And these people, the resource is incredible. The ability of these people to work and to prosper. And it's a young population as well. So that's what we see. I mean, and that's the reason why we're investing in Africa is mainly in the consumer area. Consumer companies. Companies that make, that produce beer. Banks that service the consumer. Consumer banking, credit cards, that sort of thing. So we see the future in Africa now. And it's going to be accelerated because of this technology, the leapfrogging of technology. So it's interesting. And I think Afghanistan, the same thing. You're going to see in these areas tremendous growth.
It's wonderful. My job at the moment is actually to sell a bank. If you would like to invest in a bank, come and talk to me. Best bank in the world.
But you know, this is it. What's happening is that branch networks are going by the side. It's going to be now internet banking, And a lot of the banks in Africa, in particular, what they've done is say, okay, we're going to cooperate with the supermarkets and department stores so that their teller machines become a branch of our bank. So at the teller, you can borrow money, with your credit card and get cash. That's the kind of thing that's developing. Again, it's all technology driven.
We've got one last question. Anybody who isn't trying to sell Mark a angle?
There's been a lot of commentary of late about the China growth story coming to an end. What's your view of the prospects for China, growth in China?
There's no question that China is slowing because the days of double-digit growth are over. The reason is very simple. The size of the economy is just too big. It's now the second largest single country economy in the world after the United States. And you can expect 10, 12% growth. What you can expect is 7%, 6%, 5% in that range. High single-digit growth going forward. So it's not over. When you consider that kind of growth, it's still very, very large. Just think about it. Every year they're adding about $1.5 trillion addition to their economy. And there's so much to be done. I mean, you just have to travel to China. Sure, in the eastern coast, you see all this development. But go into the interior, you see there's a lot to be done. What they've got to develop now is a consumer society. Up to now, the wealth has come from exports. Now they've got to turn this around into the domestic market. But in order to do that, they've got to develop a pension system. They've got to develop a hospitalization system. They've got to develop an educational system which is free. So they don't have. This is not, so people, why are people saving? Saving rate is very high because they're saving for these things. Now once they've got that solved, and they're doing that pretty rapidly, then you're going to see the discretionary spending power will go through the roof. It'll be very, very high. But already you're seeing, incredible consumption. Automobile consumption in China now has surpassed the United States by a wide margin. If you look at the numbers, China's like this, the US is like that. But they're going through the throes of overcapacity. A lot of investments were not well thought out, that sort of thing. And in China, you see, with the high liquidity that came out of the subprime crisis, a lot of people started industries that they shouldn't have started. A good example is in the automobile industry. There are over 100 automobile manufacturers in China. It's similar to where the US was in the 1900s, early 1900s. In the US, same thing, you had a few hundred automobile manufacturers. That will be consolidated, a lot of these companies will close, so forth. It's interesting,
That's healthy in the long term.
Oh yeah, it'll be healthy. But it's going to be interesting to look at that because one of my brothers lives in Buffalo, New York. Buffalo used to be a big industrial center in the United States. And they have a museum there called the Pierce Arrow Museum. You ever hear of Pierce Arrow? Anybody hear of Pierce Arrow, the automobile? There was a Pierce Arrow automobile company. They make beautiful automobiles. And it's kind of a counterpart of what you're seeing in China. Pierce Arrow started making bird cages. Then they started making bicycles. Then motorcycles, and then automobiles. Between 1900 to 1930s. By the time they became a big automobile manufacturer, they were making bulletproof cars for J. Edgar Hoover of the FBI, that sort of thing. Then they went bust. Like many, many other companies in America, the same thing will happen in China. You have to go through this whole cleansing process. So our job is to pick the right companies that will survive, hopefully.